Good morning. Welcome back to the Broadcast Retirement Network. This is BRN Sunday for Sunday, April 14th, 2024. And we've got another great show for you this week. We've got one half of the Legal Eagles, David Levin of Groom Law Group here, and Oliver Renick of the Schwab Network will be here to help break down markets. So sit back, relax, enjoy this episode of BRN Sunday. Time to kick off the week with a look at what is happening on Capitol Hill in terms of retirement legislation, litigation, arbitration, you name it. We talk about it right here on this network. Joining us on the line, he's one half of the famed Legal Eagles. David Levin is a principal with Groom Law Group. That's an employee benefits law firm based in Washington, D.C. David, thanks so much for joining us again on the program this morning.
Jeff, it is great as always to be here with you. Happy weekend.
Yeah, happy weekend to you and happy weekend to your colleague, Kevin Walsh as well. David, a lot going on. I guess I'm going to give you a softball here. What's some of the latest going on in the retirement space and the digital space?
Sure. Well, the big news is, as of the time we were recording this, Jeff, the fiduciary rule, the new version from the Department of Labor has left the Office of Management and Budget, which means it could be out any day now. In fact, there's always the theoretical chance that by the time this podcast goes live, it's actually out there. But either way, as soon as it comes out, whether it's next week or a couple weeks from now, we'll be covering it. Kevin and I will be sure to jump in and have a great discussion with you. Because this week, the news that is out there for this week that I think is like something clearer is, for a long time, Kevin and I have talked about privacy. We know we talk about security sometimes, but we're talking privacy, the use of information, the use of people's data, the use of people's retirement information. And that topic has been a hot topic. It's been in litigation that we've talked about at times, although the plaintiffs have not had victories in that space, although they continue to bring claims. There is still an evolving landscape there, but we have a big bit news. There's bipartisan legislation that has been introduced. That's right, bipartisan, where the Democrats and Republicans have gotten together. I know it's a word
agreement. That's always good. That's always good.
It's something that we sometimes have periods of, but sometimes we don't. But they would set up a national sort of privacy standard. Now, importantly, some very basic questions that come to mind immediately in this privacy legislation. First of all, does this mean all the state laws that Kevin and I have been talking about all this time will go away? Like any good lawyer, I'm going to give you the answer yes and no. The reason why I'm actually doing that, it's half tongue-in-cheek, but half serious, is because the legislation would preempt state laws. So a bunch of California's CCPA could be preempted, but it doesn't preempt everything. It leaves like certain things, like there's HIPAA, which is healthcare, that sits in its own world still. Similarly, employment-related data has provisions, but then there's still some openings for the states to regulate there. Because California, for instance, does, after the carve-out that Kevin and I worked on when it first came in, expired, that basically said employment-related data wasn't initially in the scope of CCPA, but now it is. This law would basically say you can use employment-related data, and as well as service providers to employers could use employment-related data for administering and using, basically administering benefits for employees. There's lots of grayness and lots of parameters to be defined about that. That raises questions as to what is employment-related and not. Like, one of the popular discussions, of course, is things like wellness, and employers have a vested stake in that. But at the same time, there are lines, and the question is, where do those lines stay? Importantly, if it's flexible, I think there's going to be a lot of room. But then we have CCPA, which out there in California, which does have some precise rules about employment-related data usage now and how that works. So I think we're going to have to see, where does it go? Now, an important thing to keep in mind, regardless of this is just an introduced bill. As we know, with other things like budget and foreign aid, and we could avoid the politics of good and bad on that. And good and bad is in the eye of the beholder. I'm not trying to be in the middle of it. This is an introduction. Will it move forward? I'm not 100% sure, unless we're looking for a grand bipartisan moment. I think there's a lot of other things that are still out there. We know, as I said, regardless of your politics, you've got things like aid for Ukraine, all those different items that are still high out there. Plus, there aren't that many legislative days compared to in this year because the campaign season is on us. Presidential election year, all the members of the House are up, a third of the members of the Senate are up, and we're in the campaign year. So the odds of that moving forward, not super high. But what is important? It sets a benchmark. It's sort of this is an initial framing of something where the two parties have come together, at least portions of their parties, and said something.
Yeah.
So does it mean everything's going to change tomorrow? No. But does it show that we're slowly trying to move, regardless if it is in this form or not, towards a national consensus, at least at the federal level, on the use of data and privacy? Yes, but there's a lot more to come because there's discussions of private rights of action, there's all these things in the legislation. But this is a framing discussion, and maybe it'll hop forward, but there's a real chance this will just set the foundation for future discussions.
And David, just to that point, in terms of so the lawmakers, basically, this is kind of championed, if you will, by several lawmakers. But really, it has to get for it to get to a floor vote or any type of consideration. I mean, it has to go through this process. And what you're talking about is there are priorities of what bills actually make it to the floor for debate. But this really kind of allows for other lawmakers and other interested parties like benefits providers, benefits consultants, and other, streaming services, all that kind of good stuff to kind of weigh in and give their feedback. It's almost like I would almost say it's almost like a comment period that we see with Department of Regulation guidance, right? I mean, there's always comment period. Well, here the congresspersons and the senators kind of weigh in and say, hey, we like this, we don't like this, and we're hearing this from the industry or not from the industry.
Exactly. There's going to be a lot more discussion. I know Kevin and I are in these discussions with different folks. It's important to see where we go.
Yeah, absolutely. Well, I think this is an important step, and certainly a national policy is something that certainly, given all the things that are going on with hackers and data breaches and all the use of data and consumer concerns, this is an important conversation that I think you and I and Kevin are going to be talking about. David Levin, we're going to have to leave it there. Great to see you. Thanks so much for joining us, and we look forward to having you back on the program next week. Have a great weekend, my friend.
Thank you, Jeff. Have a great weekend as well.
Bye, David. Bye-bye.
Bye-bye.
Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Welcome back. Now time to break down markets in the economy. Joining us on the line, he is the lead anchor for the Schwab Network, Oliver Renick. Oliver, thanks so much for popping by the program this morning.
Sure thing, Jeff. Always appreciate the invite.
Well, we appreciate you accepting. Oliver, let's I mean that in all seriousness, of course. I mean, you thinking about all, twice a day, 5 days a week, and then you come on the program on Sunday. You deserve a break. We'll send you to McDonald's. We'll give you a gift certificate to McDonald's, who's not a sponsor. Not a sponsor. Okay, Oliver. In all seriousness, let's talk about the inflation numbers. Came in a bit hot. Markets and hearts are a little flutter right now.
Yeah, it was a really interesting week. We had like 3 different types of market regimes, but let's start with the first one, which was the inflation-focused regime, which was Wednesday's market after CPI came in hot, basically confirming a trend higher in inflation again. If you are a believer that 3 makes a trend, which is pretty industry standard, and now you've got 3 months of heating up in prices, and that's not good, obviously, especially when you look at some of the core monthly metrics. We really haven't seen any disinflation in a meaningful way since the summer of last year, since it's going on a year almost. So now investors are kind of having to come to terms with this, that this really best case outcome of a further fast decline to the Fed's target of 2% is just not in the cards. We had a big drop off, of course, and a lot of disinflation from the highs of the post-COVID inflation ramp, but we still are at elevated levels, and they're looking pretty sticky, and now it looks like we're going upwards. So that's not good. And certain markets very clearly made adjustments based on this information. Big technical breakouts in the bond market and the dollar on Wednesday. That's really the most important thing that happened all week. You had a huge move in the 2-year yield, which has been contained for the last 2 months. Earlier this month and really all year, you've had a pretty steady climb in the 10-year yield and long-dated Treasury yields because growth is better than expected, and our economy is strongest in the world, basically. So the long end of the bond market had already been selling off. To see the short end sell off was the big development this week. A big surge in the 2-year yield basically means the Fed is not going to be able to cut when that is happening. So the dollar runs up with that as well because other central banks are trying to cut. They want to. Our own bank probably wants to as well, but they're just not going to be able to do that in the near term. So June came off the table. And the July possibilities might still be there. But basically, it's looking like we're not going to get any cuts anytime soon, and we might have to wait until the fourth quarter of this year. So that's a big change. That was the main inflationary impulse this week. Stocks handled it okay, but stocks kind of have some other things going on for them that they have to contend with other than inflation. And
what was the reaction of your guests? I mean, for those who have not seen Oliver's show, and I don't know why you wouldn't watch the show, I mean, you have some of the brightest minds from around the industry coming on. I'm sure there's a variety of opinions. Any consensus, though, in terms of what the Fed could do or would do, and the long-term prognosis?
Well, in the short term, the Fed's going to have to really hope that the data turn around and that this is a blip, but it doesn't really look like it. There's just enough strength in the economy to sustain prices where they are. Mm-hmm. There's not a lot of ambiguity around kind of the tone from Fed speakers. They generally have been airing more hawkish, cautioning against cutting. So we've got Jackson Hole in the summer to look forward to. I mean, it's possible that maybe Powell will wait until then, but you also have election season as well. Mm-hmm. So there's some complications there. If anybody believes the Fed is affected by any of that stuff, I mean, can't really prove that. And maybe they are, maybe they aren't. The president basically said on the same day on Wednesday, President Biden said that we're going to get a cut this year. So there's definitely a lot of tension there. I think it would be a bit ignorant to think that there's not some pressure because there definitely obviously is when the president makes comments like that on a day when inflation comes in hot. It's a little bit gold.
Yeah.
So, yeah, it's a thing is, though, right now for stock, there's more important stuff.
Yeah, and Oliver, last question. Let's talk a little bit about gold. You and I have not really talked about gold or silver or any other commodity. Gold continues to surge in terms of price. It's at the $2,400 level as of the time we're chatting, and investors are watching what's going on geopolitically. We've talked with you about that, and they've also looked at the long-term prospect for U.S. interest rates. What do you make of this flight to safety for all intents and purposes?
Yeah, it's definitely one of the most interesting things happening in markets. With gold, it's always kind of a mystery to some degree because there are a lot of things that can move gold. Sometimes gold does well in risk-on markets. Sometimes gold does well in risk-off markets. Generally, gold is most highly correlated with interest rates, particularly real interest rates, but that relationship has broken down a bit here in this big gold run. So are there geopolitical implications? I think possibly. There are some that would argue that after the U.S. Sanctioned Russia around Ukraine, that central banks have been the primary buyer of gold, and there's some pretty good evidence behind that and some good logic, too, that some of our adversarial economic powers would want to balance their, financial assets with gold. They don't want their entire, sovereign system to rely on sanctionable dollars. So having gold is a logical decision. So I think there is some central bank buying by the Chinese and Russians. But there's also this kind of rolling momentum trade across various assets that might just be coming into gold now. Basically, gold really started doing well when NVIDIA stopped rallying, when Bitcoin stopped making highs. That was kind of late March, and the stock market hasn't quite been the same since. And gold has been doing really well, so I do feel like some folks are buying gold just because they're worried about stock market coming off.
Yeah, I suspect that if you watch terrestrial TV, you're going to see a lot more of those gold ads in the coming week. Oliver Renick, we're going to leave it. Yeah, you know exactly what I'm talking about, folks. And Oliver, we're going to have to leave it there. Thanks so much for popping by the program, and enjoy the rest of your weekend, my friend.
See you, Justin.
Bye-bye. And that wraps up this episode of BRN Sunday. Have a topic of interest, someone you think we should talk to, then drop us a line. And don't forget, for all the latest curated news and lifestyle, wellness, finance, tech, so much more and all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? Well, then visit our website. We're back again tomorrow with another edition of BRN AM, and we'll have a very special guest, of course, another important topic. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.